Hey guys, it's that Dividend guy coming at you with another stock market news video. So today we are looking at Coca Cola's return on equity and whether or not we should be impressed by it compared to industry averages. So if you don't know what Coca Cola is, which I'm assuming you do, it's a worldwide brand, but it is the leading soda producer, manufacturer, and distributor in America and in the world. Um, and so this is one of the most important metrics for any company. I'm especially a leader in this space because it shows a couple things. One, it shows every single dollar that you put into the company, what you get out of it for every dollar invested, as well as it compares the company that you're looking at with other companies, and the return on equity shows how well they are using your capital versus other companies in the space and versus the average. So if you, let's say you're looking at Google for advertising, you can compare it to Facebook. Or in this case, you can look at Coca Cola and compare it to both Pepsi and um, Dr. Pepper, the individual stocks in this space, as well as looking at the industry average to see if the company that you're in is above average or if it's within the average, or see what I'm saying. So you can use this metric to compare companies and really learn where the best place to put your dollars is within a sector that you understand. So first of all, I want to get that out of the way first. First, when you invest in a company, you need to understand what it does. Coca Cola has a relatively simple business model. They produce soft drinks, they have the distribution to do so, and they have one of the best, if not the best, bottling system in the world. So, easy to understand business. People like soft drinks, people love the brand, people they drink Coca Cola products every single day. It's one of Warren Buffett's most prized, investments. And it is my favorite dividend company simply because I drink it every single day. So it's one of those brands that I am tied to, and a lot of people are in the world. It's like chewing gum. It's habitual. You pretty much chew the same brand every single day. You drink pretty much the same brand every single day. There are other options, but when you see a Coca Cola can, if you like Coca Cola, you go for that. So it's like one of the habitual things that people do, that people go for, is the brand that they know, and that's Coca Cola. So now that we've gone over a little bit of the business model and the branding, which are some of its competitive advantages, which is partly why what goes toward the return on invested capital, or ROE. Let's take a look at its metrics when it comes to Coca Cola. So they go over how exactly to break it down. Um, the formula for return on equity is net is equal to net profit from continuing operations divided by shareholders' equity. So based on the above formula, the return on equity for Coca-Cola is 33%, equals 1.8 billion divided by 24 billion based on the trailing 12 months to July 2021. So that's this quarter's earnings. The return is the profit over the last 12 months. That means for every dollar worth of shareholders' equity, the company generated 33 cents in profit. Okay, so now that we have that metric, and we know how to do that for every company now. So you take the 33% equals the U.S. Excuse me, 1.8 billion divided by the 24 billion based on the 12-month earnings um, of this quarter, and the return on profit in the last 12 months is a dollar for every 33 cents of profit. So now that we have that, sorry, I wanted to go through it again just so, because I use that formula to compare companies. So does Coca-Cola have a good return on equity? Arguably, the easiest way to assess the company's ROE is to compare it to the average of the industry. Importantly, this is far from a perfect measure because companies differ significantly within the same industry classification. Pleasingly, Coca Cola has a superior return on equity. The average is 14% in the industry. So for every dollar that you put into this industry, on average, you get a 14-cent return on that money. But with Coca Cola, you get a 33% profit. So you could get 14 cents as the industry average, or you could get 33 cents, so double, in Coca Cola. So compared to their peers, Coca Cola is a far better investment over the industry average. So um, that just goes to show, like, it is the number one in the space, so that means that it's still a viable and the most profitable return on equity that compared to the average. I haven't done Pepsi, but according to the average, Coca Cola is above that. So it still is a viable option and a great investment. And again, guys, it doesn't mean that Coca Cola is the best stock on the planet. I know they have had kind of lagging growth, but they do have such a behemoth brand that I think it's worth it. So you can use that formula on pretty much any stock, compare it to the average, compare it to a competitor. Like I said, they don't talk about Pepsi's ROE in this. It could be better. I'm not sure. But they do use debt a lot to get that return. So there are healthier ways to go about getting a 33-cent return on every dollar. Funny enough, Buffett's rule is he likes to generate more than $1 for every dollar retained. So Coca-Cola is far below what he normally would go for, but he's held the stock for so long. I don't think that matters. It probably was returning that when he bought it, but he's held it for like 60 years, so it's just or 40 years or something crazy. So the return on equity for Coca-Cola is above the industry average. I love Coca-Cola. Let me know how you guys feel about this down in the comments below. If somebody has the ROE like on hand of Pepsi, let me know. And Dr. Pepper, we can compare it. And honestly, Pepsi could beat Coca-Cola in this instance. I don't know. But they do have a more diversified brand, which makes me think that they'd probably beat out Coca-Cola because they have more... they have a more widespread, diversified business. But when it comes to just the soda sales, though, I think Coca-Cola would easily beat them out. So as a total company, I think Pepsi might be ahead of them because, of course, they have Frito-Lay and they do have General Mills. So, or sorry, they have Quaker Oats. So they do have a more diversified business, but when it comes to just strictly soda sales on just that part of the business, I think Coca-Cola would still knock it out of the park. So thank you guys so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy, and when you do, hit the bell notification so you don't miss any updates. I try to post a couple videos, 2 or 3 videos a day, and hopefully you guys enjoy. Thank you so much for watching, and I'll see you guys tomorrow with another double upload. Take care.